Last week, I was meeting with a potential client who is a first-time home buyer, and I realized there are a lot of things that first-time home buyers don't know. So stick around. We're going to cover all the basics today and make sure that you know what steps to take and in what order if you're ready to buy your first home. Welcome back to my channel. Today, I'm here with Tom from Fulcrum Home Loans to talk to you about first-time home buyers, what you need to know, and what steps you need to take. Thanks for joining me.
Absolutely. Always happy to be able to help people understand the process because there's so many misconceptions and there's so many just overall questions because there's a lot of info that you can find online from, hey, you have to have 20% down to what kind of loans are there for my situation. So it's always exciting to be able to share that information to help people get into their first home.
And as I mentioned earlier, I was meeting with a potential client last week who's a first-time buyer, and I realized very quickly that there are a lot of things she didn't know and a lot of things she had out of order. I was just going to kind of go over that situation with you and get your take on it and what recommendations you would give to her if you're able to sit down and talk with her.
First off, I think the first step is always to talk to a lender because you need to know the steps, how much you qualify for, what are my options. And I think there's a lot of pressure that's felt there as far as am I committed to doing this? Am I going to get a credit pull? Does this cost me anything? And the answer to all that is no. So I take a lot of phone calls and meetings where we just go over, hey, what is your financial situation? What are your goals? What payment wise, how long you want to be there? Is your family growing? All those things, and just kind of lay out a basis of all your goals and hopes for this process. And then we can kind of get into hey, this is what you qualify for.
So for someone who's a first-time buyer, doesn't have a clue what they're doing, and they think, oh, I'm going to go look at houses first, and then if I find something I like, I'll go to the bank and get a loan. What would you say to that?
That's the dangerous part, right? Because a couple of things could happen. One, you're looking at $700,000 homes and you qualify for 500, or two, you're looking at $400,000 homes and you qualify for more, and you don't understand how much the payment's going to be for either one. And sometimes people fall in love, with a $700,000 home and they find out they can't get that, and that can be very discouraging. So having the conversation to see what you approve for, and just to set really good expectations. Like, you're a first-time home buyer, this is the first home you're buying. This is not your forever home, but it's a great step because in America, generational wealth is typically started with real estate. And so having those conversations to set the expectations, you don't have to buy your dream home first, and here's what you qualify for, and let's go from there.
We won't go into a lot of detail on this, but let's talk just very briefly about the mindset of, I'll just go to the bank and get a loan versus coming to an actual lender like yourself.
Banks, they're large companies. And so they've got, brand recognition, they've got a ton of employees. So sometimes it's just familiar and they can all do a good job. But there's lots of things that a mortgage broker has their hands on that could be more beneficial, from down payment assistance programs to just being available on odd hours to kind of walk through. If you're doing a pre-approval on a weekend, it could be really challenging to get a hold of somebody at a bank, where someone like myself is what I do all day, every day. So I'm happy to take a phone call and walk you through those processes, give you the different scenarios, and kind of go from there.
So let's say we have a first-time home buyer who comes in. They want to sit down and talk with you. What is the most basic information that you would need from them to help them get started to find out what they could be pre-approved for?
And that's part of the laying out expectations and timelines. Because if you're 6 months out and you're in a lease and you just kind of want to get the ball started, we don't have to do a full credit check. We don't have to do all of that. We can do a soft pull. We can do, hey, let's go by, you lay out the items on a credit report that I'm going to find, your monthly liabilities, car payments, student loans, credit cards. And then let's verify your income. Give me your pay stubs and your W-2s. And we can kind of get a working number based off of that. And then just understanding, you can't go make offers until we finish a full pre-approval with a credit check and stuff like that. But at least you're going to have an idea. Here's probably the price range I can look at. Here's what the monthly payment on that's going to look like, and just kind of start there.
Now, what if somebody wants to start looking, but they're not really in a hurry, but they'd be ready to buy right away if they found the right house? Do you recommend that they go and get the full pre-approval, or can they start looking, and then if they find something, how long would it take to get the approval that they would need to write an offer?
That's a great question. So I'm very proactive, and so everyone's going to do it a little bit differently, but I'm going to want to gather as much information as possible so that in the event that, hey, I'm 3 or 4 months out, but I just found my dream home, so maybe I do want to make an offer, I'm in a position to where I've already done all the groundwork, and we can go ahead and just finish the pre-approval, which is typically just a credit pull. I would suggest a credit pull anytime you're about 30 to 60 days out from actually being, in contract and closing on a home, just because that peace of mind of an actual credit pull versus a soft pull lets us know exactly our scenario versus just kind of some of the raw data that a soft pull would get us.
So what is the difference between a soft pull and a hard credit pull?
Yeah, so typically a soft pull is going to be one of the three bureaus, credit bureaus. So there's Equifax, TransUnion, Experian. So we're going to pull one of those, and it's a soft pull. So it's kind of just old data. If you recently got a new credit card or increased a balance or something like that, it's not going to have all the most recent data, but it is going to give us a good action items that I can lay out with you. Here's this credit card. Here's this car payment. Is there anything I'm missing? Does that sound accurate? And so it gives us a good working number to go off of, but it's not an actual pull where then I can legally go off for a pre-approval letter.
So first-time buyers, I think a lot of times people assume that there's only one type of loan available to a first-time buyer. So what are the different options? What would you recommend? And maybe give an example of who might use the different products.
I'm a huge Dave Ramsey fan for the most part, but I get a lot of calls where people are like, oh, but I don't have 20% down. And that's kind of a mindset of Dave Ramsey or somebody like that, which I think for the right situation is accurate. But you'll hear terms like FHA or first-time homebuyer programs. It's to incentivize people to be able to get into homes. And that's the goal is, we want ownership. So there's down payment assistance programs out there that'll help you, get a normal loan and help you with the down payment. There's options for like an FHA loan for borrowers that maybe their credit score is not as high as they want it to be. This allows for a little bit more acceptance, and that's 3.5% down. There's 3% down if you've never owned a home before, where we can go on a conventional loan and get you in a home for 3% down. And then there's even incentives for income-driven scenarios. If you make 80% or less than the annual median income in the area that you're buying a house, you can qualify for grants or discounts on interest rates, things like that, or PMI, which is a term for anyone who's putting less than 20% down. So there's so many different options. That's why talking to a lender, kind of getting your scenario all the way laid out, so at least you can know, hey, here's my three options, here what the monthly payment looks like on all of those options, and then you can make an educated decision based on all the information that we have.
And have you noticed any trends recently with the first-time home buyers? For example, I was talking with somebody recently, and we were both recognizing how we're seeing a lot more first-time home buyers who are a little bit older, a little more established. And there's a lot of people who are first-time home buyers who are looking for houses that are a little bit bigger, not necessarily the small starter homes that we probably grew up with everybody getting.
I think a trend that we have seen lately is the 30-year-olds that are just getting into having a family, growing their family. They've got established jobs. Maybe they're both have been working, and they are kind of going from renting to, buying a house that maybe is not the forever house, but is kind of like, hey, this is a nice house that I'm going to be in for the next 10, 15 years. And with that, we're seeing a lot of people that have been working really hard to save up for down payment, but all those first-time homebuyer options are still available. FHA has a loan limit that would kind of maximize the amount you can get for an FHA loan. But as far as a conventional loan, all the same rules apply whether you're buying a $900,000 home or a $700,000 home. And that doesn't matter. If you're a first-time homebuyer, you still get all those perks.
So you were talking about people who are thinking like, okay, it may not be a starter home, but not a forever home either. And I hear a lot of people talk about their forever home or, long-term, wanting to live somewhere for 10, 15 years. But statistically, it seems like most people don't usually stay in a home quite as long as they initially intend. Mm-hmm. Have you noticed that with people who have maybe worked with you to buy a home and then they come back a few years later and they're looking for another home?
The national average for how long somebody keeps a mortgage loan is a little over 3 years. People are either going to refi into a better rate, they're going to get a bunch of equity, they're going to do a cash out refinance to pull cash out to go do something. They're going to consolidate all their other debts, which I think is going to be very common with people who bought their houses in 2020, 2021, and they had these low interest rates, but they're paying, a ton of money on their credit card debt. They're going to be refinancing out of those loans to consolidate all their debt. And then the third option is, hey, we've outgrown our house, or we bought in this area and now we want to move to this area. So on average, nationally, the average length of a loan is only kept for 3 years. I deal with that all the time. People I thought would never move because they've got a 2.9% interest rate. And now we're strategizing on how to either keep that and turn that into a rental or sell that so that you can, go purchase the next home. And so that's very common. I think it's another reason to have conversations with your real estate agent and your lender is how to strategize those best options when it comes to, buying down an interest rate on the close of a home. What length of time does that finally pay off? Just all the different scenarios. It's just good to be able to understand all your options.
And so you would say to a first-time buyer who thinks they're going to move into this home and stay there for 10 years, like, hey, it's great if that works out and if it works for you. But statistically, a lot of people end up moving sooner than they expect.
Yeah. And again, my goal is just to give data and inform. Ultimately, I'm going to do what the client thinks is best for them. So having that conversation just so they have all the pieces of the puzzle and they can make the decision that's best for them. Because sometimes, saving $30 on buying the interest rate, it's going to put extra food on the table. Sometimes, they're just thinking really short term. So every scenario is different. So I just try to hand as much information as I can so that you're really, really comfortable with the decision that you made.
So a minute ago, you mentioned down payment assistance programs. And I know Idaho has something very specific. I don't know about other states, but why don't you tell us a little bit about that?
Yeah, most states do have something similar, but Idaho's actually got one of the best in the country as far as it's a state bond program. It's called Idaho Housing. The cool thing about Idaho Housing is it allows you to basically get assistance. It's a second mortgage. So that's one common thing that people might have questions on. Is it a grant? Is it assistance? So it's a second loan and you can get the down payment covered and most of the closing costs. And so that's a lot of money that people don't realize come with purchasing a home is the appraisal, title and escrow, all your prepaids, things like that. Idaho Housing is a program that allows you've got to bring in 0.5% of the purchase price of your own money. That's got to be sourced in your bank account. And the rest of it can be rolled into the second mortgage. So you are making 2 payments, but on the right property with the right income situation, it's kind of a no-brainer. You get to keep any cash you have in your pocket for upgrades or improvements and things like that. And you get to get into a house.
Yeah. And since that's a second mortgage, does that match up with the interest rates of your first mortgage?
Idaho Housing, the second mortgage, I believe, is 2% over prime. So whatever the going interest rate is for the first mortgage, the down payment assistance, a second mortgage is 2% higher than that.
If you're thinking about getting started looking for your first home and you'd like more information, I will include my contact details as well as Tom's down in the description. So feel free to reach out to both of us and we'll help you get started.